Shares of Robinhood have been on an absolute tear since March 30th, 2024. That was when I first covered the stock on Asymmetric Investing. The stock is up 471%, just an absolutely incredible run, and I think this could continue long term. But the question is, what do we do right now? The valuation for Robinhood is absolutely crazy compared to what it was just a little over a year ago. So am I buying, selling, or holding? I'm going to dig into all of that today. My name's Travis Hoium. Thanks for watching Asymmetric Investing. And if you're interested in more from me, check out Asymmetric Investing, my newsletter. That's where I'm doing deep dives on companies. I call them spotlights. That's when I did that March 30th article on Robinhood. That was also when I started buying shares. My cost basis now is about $23.65. This position is 13.6% of the portfolio, not because I bought a ton of Robinhood stock, but because it has grown to be that big of a position. This is also one of the stocks that has helped the portfolio outperform the market since it began. Remember, I started this portfolio from zero. So if you're interested in more from me, check out Asymmetric Investing. There's a link on the screen and a link in the show notes. I also want to thank this video sponsor, Fiscal AI. I'm going to use this throughout the video, but this is the research tool I start with for absolutely everything on Asymmetric Investing. It's got all the information you need, all the market cap, ownership data, financial information, but their KPIs are really what's important. I'm going to get to some of that with Robinhood. This is going to tell you how many assets are under management, how many customers they have. Makes it very, very easy to visually see what's going on with the business. But let's dig into Robinhood. And the way I'm going to do this today is I want to talk about the business first, and then later in the video, I'm going to talk about valuation. So I'll put those in the timeline if you want to skip forward to the valuation part. But I think it's important to start with the business. I don't want to be hampered by valuation. I want that to hold me back from either buying a stock or holding onto it long term. And this is really the vision for Robinhood. This is a presentation that they gave to investors a few months ago, and the 10-year vision, they want to be more involved with active traders. This is their Legend product. They also want to grow wallet share for the next generation. That's products like their Gold card, 3% cash back. That's a credit card I use, just a phenomenally easy to use credit card, the best one I have ever experienced. And again, one of those things that just makes me more bullish on the company as you use their products. And then getting into disrupting the global financial ecosystem or playing a bigger part in that. What exactly does that look like? These are the products that they're talking about. And the way they have this is their total addressable market. $7 billion business, maybe $12 billion in margin. US active traders, about $20 billion in total. So potentially a big business, but nothing compared to wallet share. US credit cards, $100 billion business. Advisory, something they're starting to move into. That's a $70 billion business. So now you're making the addressable market even bigger just with some of the products that they've introduced only in the last few months. Now we talk about the global financial ecosystem, crypto trading, international advisory, global neobanking, international credit cards. That's how you get to this $600 billion total addressable market. Just to sort of put some context into how big the vision is for Robinhood. So the way that I think about all of these products is this is the product expansion that we're going to see at Robinhood over the next few years. For example, I use Robinhood for a retirement account, a Roth IRA, and for a traditional brokerage account. But I also have kids. I need to have custodial accounts. They do not allow for custodial accounts yet. So there's a lot of product expansion that they can have just within the Robinhood ecosystem to serve their current customers. That's a way that they're going to expand. The other thing that they're going to do is expand geographically. That's what the right side of this chart is. They're starting to move more into Europe with their token trading US stocks. That's going to be one of the ways that they move into international markets. They're also just going to get regulatory approval. They have that in some countries around the world, but a lot of opportunity to expand geographically. So those are going to be two tailwinds, product and geography. Potentially an even bigger tailwind is just demographic, generational tailwinds. So millennials and younger, this is the share of US wealth held by generation. Millennials and younger make up almost none of the wealth, 10% or so. In the US, most of the wealth is held by the silent generation or older, baby boomers, and then a little bit here with Gen X. But what customers are using Robinhood? Primarily millennials and younger. They have very little market share in Gen X and older. So that's going to be a huge opportunity as this cohort of users gets older. In 10 years, these people are going to be 38 to 53. That's going to be more prime earning age. You're going to be spending more money on your credit card, so there's opportunity there. You're going to be building brokerage accounts, retirement accounts. This is just going to be a long-term tailwind for Robinhood. So you add those three things together, and I think you have phenomenal tailwinds behind Robinhood's business. And the great thing is, we're starting to see it in the numbers. This is Fiscal AI and I just pulled revenue and net income. And this is since the June 2022 quarter. All of these are trailing 12-month numbers. So 38% compound annual growth rate. But let's layer in the growth rate. The orange line now is the total revenue percentage change year over year. And you can see that during this downturn in the market in 2022, revenue was actually going negative. That's because a lot of their crypto trading kind of fell off. Their day traders who were trading relatively small accounts. I think that's what we need to remember with Robinhood. When you go back to 2020, 2021, it was people with accounts that had $1,000, $2,000, $3,000 who were spending a lot of time day trading that money. That helps Robinhood's business, but it's not really a sustainable way to build the business. So today you have much more in retirement accounts, credit cards, things like that, just a more stable business, and it's growing faster, almost 60% growth in the trailing 12 months. Now let's flip over to their key performance indicators. So this is the KPIs. And what I did right here is in Fiscal AI, just go to the segments and KPIs section. I'm gonna start with revenue. And this is just all of their revenue segments that they have in the business. This goes all the way back to December 2020. This makes the chart a little bit difficult to look at. So let's go to December 2022. You can see just solid compound growth in each one of these segments. And it's a pretty diversified business at this point. So cryptocurrency, pretty good business, $752 million in trailing 12-month revenue. Options, another 846. This is the one that's really been growing a lot. Net interest revenue. This is where you're going to get most of your revenue from things like their credit card. So as they expand that, and I believe they're going to either 3x or 4x that number of credit cards that they have outstanding between kind of the end of the first quarter and sometime in probably the third quarter. They gave out that number in one of their presentations. I think they had 100,000 customers and they had 200,000 or 300,000 who were on the wait list, and they were really going through that wait list really quickly. So this should be an area that's going to be able to grow significantly, increase that wallet share as they talked about. So again, all of these trends are moving in the right direction. It's really hard to see warts in the business. And like I said, I'm going to talk about the business first. We'll talk about valuation in a minute. Here's another one that I look at periodically. This is total assets under custody. This is going to be a little bit volatile based on the value of those assets. So when cryptocurrencies go crazy, when equities go up, these assets are going to increase just because the assets themselves are increasing in value. Nothing that the company is particularly doing. But what you're going to want to look at is net deposits. How much are people depositing on a net basis? So those numbers are growing and really solid, $57.3 billion over the trailing 12 months. And then how many funded customers do you have? This is actually where I think there's a lot of opportunity for growth. The funded customer number is not actually growing all that quickly. 23 million at the end of 2022, now 25.8 million. This is where Robinhood has a lot of opportunity for growth, but it is tough to get customers to move from an old brokerage to a new brokerage. So what you're seeing in the numbers here is that Robinhood is growing primarily by increasing the wallet share, by increasing the utilization from their existing customers. I think I would fall into this. I started a Robinhood account maybe 2 years ago. Started with a little bit in a brokerage account, added that Roth IRA account. Now I have a credit card. They're increasing the revenue that they're generating from me because I'm increasing my usage of Robinhood versus other financial institutions. So I think that's the way that they are typically growing right now. The next phase is, can you kick up this growth number from the number of customers? And with only 25.8 million customers, there's a lot of opportunity for growth. But here's the other one that I want to highlight. And this really gets to my core thesis behind investing in Robinhood back in March of 2024. They had introduced their Gold subscription and their Gold credit card at that time. They were new products. They were pretty different products from what you had already seen on the market. But what I was seeing was potentially a membership business model. You pay $50 a year or so to become a Gold member, and then you get these benefits. Like you get a 3% cashback credit card. You get a match on investing in your brokerage account or in your Roth IRA. These are things that typical brokerages don't do. So could this be something that would attract customers and it allow Robinhood to grow the business? We have seen that has absolutely been the case. December 2022, there were 1.14 million Gold subscribers. Now there are 3.19 million, and this is growing like crazy. So this is exactly what you want to see. The business is growing, it's becoming more profitable. And I do want to just go back to this from the profitability standpoint. They have cut their costs in a dramatic way, have become profitable, and have now been kicking in the operating leverage that you would expect from a digital business. So all of this is what you want to see from Robinhood. Everything is going about as well as it possibly could be. That's why the stock is rising like a rocket. But let's get to those valuation numbers because this is where things get a little bit hairier. Let's just start with the headline numbers from Fiscal AI. Price earnings multiple, 59. On a forward basis, the price earnings multiple is about 78. So really, really high multiple. But we can get to this price to sales multiple here. Here, I will hide the PE multiple and just focus on price to sales multiple because I think this is where you're going to see how crazy is the valuation, how much growth is priced in. Sometimes I find price to sales multiple to be a more useful metric because it does pull out that profitability. So if you don't yet have a profitable business, maybe you're a really high growth business like this is, price to sales can actually be more meaningful. But paying 7-8 times sales is a much better value than paying where we are right now, 28.5 times sales. Now, let's go back to 2023. Where were we? About 5 times sales. So basically this entire period from February 2022 through August 2024, you were in that 5, 6, 7 times sales. Multiple expansion has played a huge role in the stock price increase over the past few months anyways. That means that investors are paying more for future growth. Those expectations for the company's performance have gone up in just a short period of time. And this is actually where I get uncomfortable buying the stock. So let's start with that buy side. Would I pay 28 times sales to buy shares of Robinhood today? No, the answer is no. We are at a high point in the market. We're at a high point with basically everything that Robinhood is doing, whether you're talking about equities, options trading, cryptocurrencies. The business is doing about as well as it possibly can, and now the price of the stock has reflected that growth. But they will go through a downturn again. That's what we saw at the end of 2021 and into 2022. That's why the multiples came down. So when the business came down, when revenue growth went negative, the multiples contracted as well. That's why you had a huge drop in the stock. I want to be buying when those multiples are lower and when the future growth rate is going to be higher than it is today. So that's when I want to opportunistically be buying. Yet on top of that, this is already a big position in the asymmetric portfolio. Like I said, about 13.6%. So the biggest position that I have right now, I don't need to be adding to that. I don't want to be anchored on price. I don't want to be anchored on valuation, but you do have to bring it into the equation when you're looking at a stock. But am I selling Robinhood? Absolutely not. I am not selling Robinhood because multiples can go even higher. This is Palantir. I talk about this one a fair amount, partially because I'm just not buying Palantir because of the price to sales and price to earnings multiple. Another profitable, phenomenal business, but their price to sales multiple is 117 today. That is far higher, 4 times higher than we have for Robinhood. So the stock could continue to go higher as multiples expand, even if I think they're already expensive today. So I don't want to sell just based on valuation, but I'm also hesitant to buy because of valuation and because it's a significant position in my portfolio. So I'm seeing better buying opportunities elsewhere, but I'm also not selling because I don't want to try to time the market and miss on big rises in a stock that are just more multiple expansion. So at the end of the day, my final answer is I'm just going to hang on to my shares of Robinhood. Yes, the valuation makes me a little uncomfortable, but it's hard to look at the business and see any major flaws in the business. And what's not a good idea generally for investors is to sell a business that's doing extremely well just based on valuation concerns. You could have sold Netflix, Apple, Axon Enterprises. These are all companies that were performing phenomenally well that you could have just sold on valuation concerns almost any time in the past decade, and it would have been a terrible idea. I am not going to make that mistake in the asymmetric portfolio. That's one of the frameworks that I have for the portfolio is just hang on unless you see something wrong with the business. If there was something wrong with Robinhood's business, if they weren't growing, if they weren't gaining market share, then my tune would change significantly. But that's not at all what we're seeing. I think the tailwinds behind the business are too good to ignore. So I love owning the stock, but the valuation is what's going to keep me from buying more. So I'm a hold for Robinhood here, but let me know what you think about Robinhood stock. And don't forget to subscribe to Asymmetric Investing. Like I said, I was buying this stock. My cost basis is $23 or $24 per share. So if you want to know what I'm buying every single month, I disclose that on Asymmetric Investing to the premium side. So I'd love to have you as part of that community, and you can follow that market beating portfolio. All of that is on asymmetric-investing.com. And of course, check out Fiscal AI if you want to do some of this research yourself. I think this is the best tool that I've ever seen for financial market research. Thanks for watching, everybody. We'll see you here next time.